Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I'm going to share with you the reasons that I bought Palantir stock here recently in February. Palantir's been a hot stock across the internet over the past 90 days or so. And to be honest with you, there's a lot of back and forth on Palantir's valuation. Today the price sits about $29. I bought in a couple times, both around the $25 mark and about the $28.50 mark. But this is a stock that's run as high as $45 and as low as $25 just over the past 30 days. So there's a lot of people trying to sort out, where should Palantir be valued, and is the price today a good deal, or should you wait for another opportunity? For this video, I'm going to share the reasons why I bought Palantir, some of the rationale behind it coming out of their Q4 earnings report, and why I'm excited for this company, although I don't think it's like $1,000 stock or anything over the next few years. But I do think it can surprise some people. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research on every stock you buy. And of course, if you want to help me out and you like stock market analysis like this, always appreciate it when you like this video, subscribe to the channel. Thank you to everyone who's supported the channel so far. All right, before we jump into the reasons on why I bought this stock, I just want to cover the risks a little bit with Palantir. And these are all risks that have been heavily debated across the internet. And to start things off, it might be surprising to most people, but this company's been around for a while. 15, 16, 17 years, something like that. And while the IPO, that may have been the first time any of us really heard about Palantir, for a long time, this company's been grinding away, and they have yet to actually make a profit. Now, I'll show you in a minute here how analysts are projecting their profits for the next several years. But there's always going to be concern about a company that has been in business this long and has yet to really find that balance of product offering versus profit. The next hot topic for Palantir has to be stock-based compensation, which at $1.3 billion here in 2020 was actually more revenue than they made last year, which came in about $1.1 billion. Now, you'd kind of figure that the stock-based compensation argument is sort of a one-time event. Not very good news technically for the bottom line. And while you're always going to have some stock-based compensation, my assumption is that it will not reach a level like this again, perhaps ever. But paying employees with stock kind of bleeds into the third concern with Palantir, and that is the fact that their lockup expiration just happened a week or so ago. So now there's all these employee shares that are available to be sold. And we did see some weakness after their Q4 earnings. And I think it's suffice to say, lockup expiration, I don't always really see the danger on the first day of expiration. To me, it's kind of a bleed out scenario, right? You're gonna have some people who have been sitting on shares for a long time, and they're anxious to get out and to get paid for whatever work they did to help make the company go public. But the bigger risk is as Palantir hits, let's say, low points or revenue lulls, then you get, just like the regular market, you get these freak out scenarios where folks who hold those stocks, they're eligible to sell now that it's past the lockup time. So you can have this bleed out of shares into the market, and that can be concerning over the long term. The flip side of that, though, is if the company continues to innovate and employees are excited about the direction that they're going and they're seeing good contracts come in and stuff like that, then that bleed out scenario doesn't happen as much because folks see the value in long-term holds. All right, now we'll cover the valuation risk that exists with Palantir, and I'll show you some of the things that I've been reading that have helped me a little bit balance the valuation in its current state. All right, as I'm recording this, we're actually in a bit of a down day on the stock market, almost down 2% in the NASDAQ. And Palantir is running ahead of that flow a little bit, minus 2.2% and counting. You got a stock price today of $28.35. All right, so here's the 6-month look. And you can see that those folks that had conviction early, got in, most likely between $10 and $15, which ended up being a great place to be, in my opinion. We have since run up considerably from there. Around Thanksgiving, you were up to 29, hit that level a couple times. And then coming out of the gate in January after the inauguration, you actually had a couple really high points in the 30s, even as high as $39. But you see what's happened since the earnings call on the 16th. You got as low as 25.17. I was lucky enough to pick up a few shares in there. But there has been a nice bounce back and sitting right at 28 today. Now, like all stocks that are not yet profitable, we do not have PE ratio, no EPS. But here's some of the metrics that we do have for Palantir. And you scroll down and you've got a price to sales of 26x. You got the enterprise revenue at 48. And while those are not the highest multiples you'll find in this wacky market we have today, it's certainly cause for concern, right? I mean, you figure price by sales alone is, 25 years away on the current pace of breaking par. All right, so when we think about the valuation today, I would say definitely high, but we take a look at what analysts are thinking for 2021, and then the next fiscal year, 2022. Palantir does run on a traditional Gregorian calendar, so their years end at the end of December. You've got 8 analysts who are making guesses at this, and you've got 16 cents in 21, and you got 21 cents in 22. So if you divide 28 times 16 cents, and I have a calculator off to the side here, we've got a PE for the end of 2021, so about a year away, of 175. So we'll call that a forward PE. If they got to 21 cents, the kind of 2-year forward PE is 133. All right, so even on a forward PE basis, based on the end of fiscal year 2022, you're still looking at a forward PE in that range of 133. So again, not the cheapest stock that you're going to find in the planet for sure, but I really do believe that they can beat those EPS projections. And while that's just my opinion, I'll go through some of the reasons why I bought into Palantir stock now, and why I think it can still surprise, even though the price that we're paying today doesn't exactly look reasonable, certainly by the metrics that I typically go by. All right, so my interest in Palantir really kind of peaked after their Q4 earnings report, which I've got here, and I'll show you a few select slides from it. You know, me having a long digital marketing background, I can certainly sympathize with the business of trying to take disparate data and bringing it into one platform. This is a big problem in digital marketing. If you think about all the different touch points that there are in marketing, a simple example would be, Google organic search, direct traffic, Instagram, Facebook, you name it. You've got stuff coming into your website from all different places, and they all have different metrics. And trying to solve what we call attribution in digital marketing, it's not an easy thing. And that's just digital marketing, where you kind of figure like, hey, the language is pretty straightforward, right? It's traffic and interaction. Well, then you start to get into where Palantir plays. They've obviously had a ton of success within government organizations, but the big win for me is in more of a business-to-business environment from a contract standpoint. And in their Q4 earnings report, they really tackled some of those concerns and showed some growth in B2B. So again, I mentioned digital marketing, but if you look down here, we signed several deals across automotive, energy, healthcare, insurance, mining, shipping, and more. You want to talk about industries with disparate data. I don't even like to think about the different reporting platforms in healthcare, right? Between medicine and insurance and individual doctors, other treatment arms like physical therapy, and even individual pharmacies, right? They're all trying to offer healthcare services, you got to bring that stuff together somewhere. Energy is obviously one. They had the example of working with BP, but let's look ahead 10 years in energy and talk about all the different ways that energy is going to be produced, both from green energy initiatives and the fact that fossil fuels are still going to play a role in how we get about even 10 years from now. And I also like these use cases of mining and shipping. Holy cow, shipping. Amazon's done such a great job with consumer shipping, but just, zoom out of the shipping world for a second and think about the fact that you have pallets coming from Asia going into ship containers, riding across the ocean, landing in San Francisco or somewhere, and then making their way to Florida. Like, it's crazy. So if Palantir can have some success with these so-called large deals that they're quoting, then this is really where I see the bright side of Palantir and where I think they can surprise down the road. Then we look at some of the revenue growth, and we know that EPS is a problem, right? This isn't exactly all profit here, but you've got plus 40% on the Q4 comp. You got plus 47% on the full year comp, and revenue from our top 20 customers increased by 34%. So if you're down on Palantir, you definitely have the argument that they're too top heavy, right? They're too reliant on government contracts. They're too reliant on their big customers. But what we're looking for, and we got to see, is that the big customers are buying more. So there's nothing wrong with that, right? The bad news would be is if your top customers had declining contracts, right? Or they had canceled services, and we're not seeing that here in 2020. And in regards to contracts, I wanted to call out, which to me seems like a great pivot by the company into more of a software as a service billing methodology that may actually hurt them a little bit in the short term, but it'll balance revenue over time. This is from the earnings call. As we noted last quarter, we have historically pursued multi-year upfront payments from our customers, which has led to significant growth in contract liabilities in prior periods, such as billings and cash collections often exceeded revenue. Over the course of 2020, we moved away from our practice of multiple years of upfront payments, which have led to lower 2020 cash collections and a greater portion of our revenue coming from the recognition of such contract liabilities. So in other words, instead of getting this revenue in one gigantic lump sum on a given year, say for a 5-year contract, the revenue is going to be recognized more across time so we can get a better feel for how Palantir is actually doing in a given year. It will also give them the opportunity to talk about sort of like subscription revenue or contract revenue that's already booked for the years ahead. So instead of starting at zero every single year and building on huge contracts, some of which they have been working on for several years in the past, this is going to be a key addition for Palantir. And I think it will help not only with the EPS slowly over time, but I also think it'll be a lot more transparent for investors like us on how the business is growing over the long term. As far as the future goes, company mentioned in their earnings call for our 5-year outlook, we expect greater than $4 billion in revenue in 2025. Starting in 2021, we expect greater than 30% annual revenue growth each year for the next 5 years. And in Q1 of this year, we expect revenue growth of 45% or $332 million at the midpoint. And we expect adjusted operating margin of 23% for the quarter. Okay, so those are some of the reasons why I became more bullish on Palantir over the past week or two compared to where I sat even as early as last December. When I looked at this company and I kicked it around, they didn't talk as much about commercial and B2B back in their earlier presentations. They showed the power of some of the platforms that they were developing for the armed forces, some super cool stuff as far as like deploying teams and communications and all that. But I always had this fear in the back of my head that was like, man, the government can be a funny thing. And I would feel a lot better if this company developed more of a commercial platform. But ultimately, in this Q4 report, they showed me what I was looking to see. And while the valuation is elevated right now, if you're looking out probably 2025 or beyond, and you're going to manage this one through dollar cost averaging or buying the dips, which is exactly what I project to do, then I think it's a decent play. And it could be one of those ones that you wake up 10 years from now, and it certainly has the potential to do very well if they continue to improve and expand their use case. Like all companies that haven't made profits yet, Palantir is basically a charity or a nonprofit, right? Until they start to generate that EPS. We do look like we will have some EPS this year, and it's not going to be phenomenal growth at the EPS line that I see over the next 2 or 3 years. But I think they'll outperform analyst projections. And $28 or below seems like a great entry point, particularly if you just go in and you buy, let's just say 20% of your projected holdings at one time and keep watching it in the background, right? And just try to pick it off as it ebbs and flows. All right, taking a peek at tip ranks as we always do to see what the best performing analysts are thinking about Palantir. And most of these updates are pretty fresh, 5 or 6 days ago, right after the Q4 earnings. And you can see we have a mixed bag, right? You've got one buy at $40, one hold, 3 sells coming in around 20 or less, and then another buy at 34. So analysts are just as confused as everyone else on where to target this company. And I think if you're investing at home, the question is, knowing what you know, do you think they will beat earnings projections, which is the camp that I sit on based on my sort of B2B thesis? Or do you think they're going to continue to tread water and barely beat their earnings projections and see some slowdown on their sales growth? I think if you're the latter, then you're definitely targeting under $20. And if you sit in my camp, you're probably hoping for this 34.40. To be honest, the hold here at 27 is probably the fella that I agree with the most. And my target going forward is going to be under, $29 or so. And I'll be looking for larger movements to just DCA on the way down. And then once I hit a certain point, maybe $5,000 invested or so, then I'll just let it ride for 10 years and we'll find out later if I was right or wrong. All right, guys, so that's my updated take on Palantir stock. Hopefully you learned a couple things about the company in this quick video. If you enjoyed it, please give me a like and subscribe, and we'll see you on the next one.